Hello, welcome to our trading game presentation with Nick, Mitch and Nick. These are our initial stocks that we purchased at the start of our portfolio. We invested 40,000 into stocks and crypto and left 10,000 in cash. This showcases our stocks relative to our portfolio. As you can see, it's relatively diverse and spread. The outlier is Vanguard Investment, where it takes up 25% of our portfolio, and the other assets are spread relatively evenly, holding about 10 to 15% of the portfolio respectively. The distribution of our portfolio is fairly defensive, covering off a few sectors while still trying to be aggressive with crypto and lithium. The process behind purchasing these initial stocks. IGO, the future of electric vehicles and renewable energy, drew us to this stock. It hasn't had a great past year, hence why we took out a short position in our initial portfolio where we were able to make some short-term gains. The next one is Evolution. This is a gold company. The gold price is forever increasing and it's had a really good past year, going up over 100% off its initial stock price. CWY is a waste management company which has contracts with the local government and councils. It's a fairly stable and defensive orientated purchase for us, hence why we got it in our portfolio. PLS is a very volatile stock. It's in the lithium sector. It does have a fair few new projects coming, and it was more of a short-term play for us, where we could have taken a profit and ran. Vanguard Investment is our next one. This is our main holder in our portfolio, given the diverse nature of the company, where it lies in properties, equities, bonds, etc. This one was good for our core, just holding it throughout the whole time as a good stable base for our portfolio. The next one is BHP. This is a well-known company with strong dividends and good cash flow. This was our first blue chip stock. We wouldn't really see hard, sharp gains, but it's a very stable stock and we can sell if we needed to. The next one is Wesfarmers. The growth is steady with Wesfarmers, similar to BHP, another blue chip stock. We just thought it was very stable and flexible, hence why we purchased. And then the last one we purchased was XRP, which is a very volatile crypto market. We knew that, but with the SEC lawsuit dropping, we thought the price would increase and we could take some short-term gains on this. These stocks are the stocks we purchased throughout. They're all up-and-coming mining companies where we've seen upside in them and try to make some short-term gains for our portfolio without taking too much risk.
Initially, we felt it was best to establish our portfolio as diversified as possible. This consisted of investing in a mixture of cryptocurrency stocks and ETFs. We were more comfortable with companies we were more familiar with, and therefore decided to initially base our portfolio off of the maximum allowable blue chip stock holding, being 10% of our portfolio. We decided to split this evenly between BHP and Wesfarmers. We then also felt that it was important to ensure that we maintain a 10% cash balance for future short positions that we were going to take on our stock purchases, and therefore decided to put aside this cash as funds we're not going to touch in our initial portfolio setup. We then figured that it would be beneficial to invest in another industry-proven ETF, being Vanguard. We figured that it would be a lower risk investment, as within the ETF itself, it holds a diverse range of individual stocks and securities. It was also important to have a considerable amount of our funds invested in options that are being actively managed and is often able to be traded with more liquidity than some other stocks. It covers most sectors and therefore is able to provide a more stable investment. As we now had allocated 40% of our funds into a more low-risk, stable investment option, it was now time to allocate the remainder into a mixture of diversified but potentially more volatile investments. We decided to allocate 10% of our portfolio into an extremely volatile investment and decided to invest in the cryptocurrency XRP, as it was completely different to the rest of our portfolio. We then rounded out the remaining 50% of our portfolio by spreading these funds among 4 Australian listed stocks with a mining company focus. This consisted of Pilbara Minerals, Evolution Mining, IGO, as well as Cleanaway Waste Management. We decided to make a predominantly mining stock portfolio as we felt they had a potential of significant upside and are generally well-proven Australian industries to invest in. Our plan didn't drastically change from how it started. We're happy with how our blue chip stocks and ETF were performing and felt no need to alter these investment choices. We did, however, feel that we initially invested too heavily in crypto and decided to sell down half our XRP holdings and reinvest these proceeds into a more futuristic-based company, being ALM 3D, which is our leading 3D printing service, to add more diversification. We continued with the strategy of investing our Australian stocks primarily in mining-related companies. However, we decided that we should further diversify the amount and scale of mining companies for better security. We used proceeds from selling down some of our Pilbara Minerals and IGO holdings to purchase Samphire Resources, Mika Metals, Torque Metals, and Horizon Gold Limited.
The efficient market hypothesis is the idea that all asset prices already reflect all available information. This means it's nearly impossible to consistently beat the market just through timing or stock picking. There are three main interpretations of the efficient market hypothesis that vary in strictness of what is considered to be information. For the weak form, information is past market prices and data. For the semi-strong form, it also includes publicly available information. And for the strong form, it includes past market prices and data, publicly and privately available information. Accepting that beating the market is difficult, we purchased 133 units of the Vanguard Index Fund. This let us track the market directly rather than trying to outguess it. We also invested in large cap companies based on the belief that strong fundamentals and stability would deliver reliable long-term returns. However, not all of our actions followed the efficient market hypothesis. We short sold Aurora Energy and IGO Limited, expecting their prices to fall. That assumes markets sometimes overvalue stocks. We also bought higher risk assets like Junior Miners, Ora Banda, Horizon Gold, Torque Metals, and Ripple XRP, believing that they had growth potential not yet priced in. Our portfolio also showed behavioural biases. Overconfidence by trading small cap mining and tech firms like AML 3D and Mika Metals, assuming we could spot undervalued gems. We also displayed the gambler's fallacy, buying heavily into gold and metals, assuming past performance would continue. We also showed loss aversion, selling profitable positions like IGO and Cleanaway quickly, but holding onto speculative miners instead of cutting losses. This links to the disposition effect, selling winners too soon and holding losers too long. On the positive side, investments in Wesfarmers, Cleanaway and Evolution were based on strong fundamentals, and dividends from BHP, Evolution, Wesfarmers and Cleanaway rewarded us through company earnings rather than through speculation.